Welcome to our comprehensive AUD/NZD analysis report covering the period from October 6th to 11th, 2025. In this presentation, we'll examine the significant market movements that drove the Australian dollar to three-year highs against the New Zealand dollar. We'll explore the Reserve Bank of New Zealand's surprise rate cut, technical breakout patterns, and key factors influencing this currency pair. This analysis was prepared on October 13th, 2025, using data from multiple trusted Forex sources. Let's dive into the details. Our analysis draws from 5 leading Forex and financial market platforms to ensure comprehensive coverage. We've consulted TradingView for real-time price data and technical indicators, Investing Live, formerly known as Forex Live, for breaking market news, actionforex.com for detailed technical analysis, forex.com for institutional insights, and Daily Forex for expert commentary and forecasts. By synthesizing information from these diverse sources, we provide you with a well-rounded perspective on the AUD/NZD market dynamics during this critical period. Let's examine the current market snapshot from TradingView as of October 14th at 12:08 GMT. The AUD/NZD pair is trading at 1.13428, showing a slight daily decline of 0.32%. The day's trading range spans from 1.13312 to 1.13951, with volume reaching 69,270 ticks. Looking at the broader performance picture, the pair has gained 1.73% over the past month and an impressive 5.66% over 6 months. Year-to-date, AUD/NZD is up 2.51%, demonstrating consistent strength. These metrics confirm the Australian dollar's sustained outperformance against its New Zealand counterpart throughout 2025. The defining event of this period was the Reserve Bank of New Zealand's shocking 50 basis point rate cut announced on October 8th. Markets had anticipated only a 25 basis point reduction, making this decision twice as aggressive as expected. The RBNZ lowered the cash rate to 2.50%, marking the 8th consecutive cut since August 2024 and bringing rates to a 3-year low. The central bank explicitly signaled openness to further easing, citing concerns about New Zealand's fragile economic conditions. The market reaction was immediate and dramatic. The New Zealand dollar plunged while AUD/NZD surged to 1.1421, its highest level in 3 years. Analysts now expect another 25 basis point cut at the November meeting. From a technical perspective, Action Forex identified several critical developments. Between October 6th and 8th, AUD/NZD rallied 1.10%, climbing from 1.1320 to 1.1446. The pair is now testing the crucial long-term resistance at 1.1470, which represents the upper boundary of a bullish basing pattern that's been forming for over 10 years. Supporting this bullish momentum is the widening Australia-New Zealand 10-year bond yield spread, which has expanded to 0.16%. The price action remains confined within a medium-term ascending channel, established on August 20th. A decisive breakout above 1.1470 would likely trigger acceleration toward 1.1510. Key support sits at 1.1370, with a break below that level exposing the 1.1320 to 1.1330 zone. 2 major news events shaped the market during this period. First, the RBNZ's surprise 50 basis point rate cut to 2.50% sent shockwaves through currency markets. This move, double what markets anticipated, reflected deep concerns about New Zealand's contracting GDP and economic fragility. The immediate impact saw the New Zealand dollar tumble while AUD/NZD rocketed to 3-year highs. Second, escalating U.S.-China trade tensions added volatility to commodity currencies. President Trump threatened a new 100% tariff on Chinese imports, prompting China to announce restrictions on rare earth exports. Since both Australia and New Zealand are heavily exposed to the Chinese economy, these developments triggered risk-off sentiment, putting pressure on both currencies against the US dollar. For the short term, Looking ahead 1 to 3 weeks, we identify key trading levels. Resistance is positioned at 1.1470 to 1.1510, while support lies at 1.1320 to 1.1370. The outlook is cautiously bullish, contingent on a successful breakout above the 1.1470 resistance level. The dovish RBNZ stance and widening yield spreads continue to favor the Australian dollar. However, technical indicators on shorter timeframes are showing overbought conditions, suggesting we may see a minor pullback or consolidation phase before the next significant upward move materializes. Traders should watch for a decisive break above resistance to confirm the bullish scenario. Looking at the medium-term outlook spanning 1 to 3 months, the trading range expands. Support is expected between 1.1200 and 1.1300, while resistance targets the 1.1510 to 1.1600 zone. A successful break and hold above the 1.1470 to 1.1510 resistance area would confirm a major bullish breakout with potential for even higher targets. The fundamental driver here is the monetary policy divergence between the Reserve Bank of Australia and the more dovish RBNZ. However, the outlook heavily depends on several key influencing factors: the continued divergence in RBNZ policies, global risk sentiment dynamics, developments in the US-China trade relationship, and trends in the Australia-New Zealand yield spread. In conclusion, 3 key findings emerge from our analysis. First, the RBNZ's dovish stance is driving AUD/NZD higher. The surprise 50 basis point rate cut has created significant monetary policy divergence with the RBA, and the widening AUNZ yield spread to 0.16% provides strong fundamental support for the Australian dollar. Second, we're witnessing technical breakout potential above 1.1470. The pair is positioned at a critical juncture, and a successful breakout would confirm a major bullish trend targeting 1.1510 and beyond. Third, traders must monitor US-China trade developments closely, as both currencies remain highly sensitive to these geopolitical tensions. The confluence of dovish RBNZ policy, strong technical setup, and favorable yield dynamics suggests a constructive outlook for AUD/NZD in the near to medium term.